Hello, hello. Welcome. Jake Royall coming at you again for the sixth webinar in a row. How's everybody doing? Thanks for being patient for the stragglers showing up. I appreciate everybody being here. It's 1:09 in Santa Barbara, California, where I am shouting out from. How was everybody's week so far? Before the webinar, I was doing the Sally Sells Seashells by the Seashore, and that's harder to do than I always assume. Anyway, where am I? I don't know. What's going on here? What are we looking at? The S&P 500. What the heck? Well, Michael's back in town. So is Ron. They survived their motorcycle trip. Well, they were back in town last week, but they were recovering. I think they're recovered now. But yeah, I got a notice from Michael letting me know that I'm going to be doing the webinars for a while. So I'm really stoked about that. I get excited about these things, these webinars. And I was telling Dave, our sales guy, by the way, Dave, you want to go and post your number and your contact stuff, please, in the chat right off the bat here, if you don't mind. Thank you. And I was telling Dave before the webinar that I don't know. Well, I wasn't telling him this, but something along these lines. Back when I lived in Winter Park in Colorado in the ski town, I was playing music professionally. I mean, semi-professionally. I was getting paid for it, and I would I'd get nervous before shows. And then one day, I realized that I wasn't actually nervous. I was just excited, like a dog, almost like shaking like a dog. And then I realized that for me, nervousness and excitement actually felt the same. I gave them the emotions different labels, but they felt the same. And ever since then, I've just taken note of it. Every time I feel like excited like this, it's like, is it nervousness? Is it excitement? And then I actually heard that there was a study done somewhere that it's literally the exact same endogenous drugs, if you will, the emotional chemicals from our hormones and whatnot that are released in excitement and anxiety or nervousness. So it is the same thing. It's just how we perceive them. Segue into trading. How many emotions do we as traders feel every single day? And amplified too. I mean, as traders, that's besides analyzing charts, the other most important thing that, I mean, arguably more important, is literally being in touch with our emotions and having awareness when you might want to self-sabotage or double down because you're so excited. Oh, this trade's really going well, and there you go, and then you double down, triple down, and then it turns around against you, and then you're shaking and you're nervous, and then you try to double down the other way, and it just ends up in disaster. This TachEon TimeWarp, though, this software right here, it has actually been I don't know, let's see. I mean, it has helped me substantially with my emotions, just because of the necessity to wait for these signals and knowing when they're coming. It's like a dog that doesn't know when the master is going to come home, and then suddenly the dog actually knows. Well, the dog's going to be a little bit more chill when the master comes home. So that's what these dots are like. Dogs or masters or something, I don't know. You guys like my chart? I made this special for you. 25 people, sweet. So yeah, this is professional institutional grade software we're going to be taking a look at, and we're going to be taking a look at a different market today. We can also take a look at the NASDAQ, but Michael wanted me to show everybody this particular chart, which is my favorite time frame. If I do trade the ES or the MES, it is the 3-minute. So I mean, look at these signals, freaking fantastic, just absolutely fantastic. So it was the World Economic Forum, but it wasn't. What's it called? I gotta pull it up here. I'll bring it in. Today was this Jackson Hole Symposium. What's up with that? Well, I did a little research on it. I actually hadn't heard about this until today. Basically, a lot of bigwig bankers and institutional folks come together in Jackson Hole. Beautiful place. Has anybody been to Jackson Hole? Freaking, I could live there. I could totally live there for at least a year. I could probably do a few years there. Anyway, they come together and they talk about finance, and it's all day, and all day on Friday as well. And then check out tomorrow, Friday, Fed Chair Powell speaks as well. So I'm looking forward to tomorrow, almost with a nervous excitement. So the signals are working great today. Okay, so how many people, let's see, how many people have this software or don't have the software? If you don't mind, like raising your hand if you do not have the software yet, so kind of know the flow. I also have this poll that I can take a look at here. 71% already own the software and love it and are here to learn more, and 29% are here to learn how this being TachEon TimeWarp, might help them become a better trader. Well, in my experience as a customer, because that's what I am, I'm a customer of Back to the Future trading primarily, number one. And then number two, now I'm officially the Back to the Future mentor with TachEon TimeWarp. So if anybody needs help, just let me know. Know the software inside and out, the patterns, all the cool stuff. I'm obsessed with it and have been for, it's gonna be 2 years in September. So yeah, 2 years. It is September. And speaking of calendars, before I get to, do you guys ever take a look at this NASDAQ trading calendar? I have noticed a direct correlation with wonky, weird, ranginess on these short interest release dates. So that was yesterday on the NASDAQ. There's 2 of them per month. I'm not sure if anybody's ever taken note of that, but figured I'd just throw that out there. Take a look at the chart real quick before we get into the slideshow. I mean, white dots, for anybody who doesn't have the software, white dots mean up, blue dots mean down. Very simply, white dots up, blue dots down, white dot up, blue dot down. And by down, I mean there is historical significance in the data at 1033, enough so that the 12,000 lines of code that comprise the TachEon TimeWarp software has determined that it's worth putting a selling dot right here. Blue dots are selling dots, white dots are buying dots. They're windows in time. It doesn't mean that the price is going to shoot straight up with one candle all the way to the sky. Well, I mean, here it takes a few candles, but it certainly does shoot up. And then selling dot, down, buying dot, up, selling dot, down, buying dot, up. Trend starts here, and then we got actually a stop puncture. Then we have a buying dot and we consolidate here, and it comes up a little bit, and then lo and behold, down and up. And a little bit reach. I love seeing these little retracements right here at 1236. Anyway, I just want to show that real quick before we get into the slideshow, and we're going to be coming back and taking a look at the strategy that I use to trade the ES, the NASDAQ. I don't really, sometimes I used to trade crude, but mainly just the ES and NASDAQ, mostly NASDAQ. But like I said, the big cheese wanted me to take a look at the ES with you folks. Not seeing my cursor? Thank you, Jim, for mentioning that. You don't see a yellow cursor? Let me put the slideshow on anyway. I need to get away from that chart for a second. It's just a little foreshadowing. Let's start slideshow. So I'm going to tell everybody who does not have the software, play from the beginning, who does not have the software, what the heck, where do those dots come from? How do we know that those dots aren't just Back to the Future cheating, that I'm sitting here doing this webinar and just lying to you folks? Well, I don't know. Let me take my normal deep breath at about 10 minutes in so I can kind of center myself here. 1 second. Hey, everybody can take a deep breath. Trading day's over, right? Yeah, 5 minutes ago officially. And in and out. Okay, I can take the hum patch off my forehead, which is a brainwave synchronizer. What is that, you say? It's a new company. I volunteered to be one of their test dummies last year. Okay, that's interesting. So you can't see a yellow cursor. Lowell says you can't see yellow cursor either. No, Jim, no. Oh no, that's very strange. I wonder if that has something to do. Let me try here before we go any farther. How about now? Can you see my crosshair at least? Only your screenshot. What about if I move it? Can you see it moving around? Whoa, really? Oh, it says paused for some reason. Oh, okay, all right. I don't know why. I shut the, how about now? How about now, Jim? Sweet. That's so strange. I've never seen it pause. I didn't touch, maybe I touched it. I didn't realize. Thank you for letting me know. It's a good thing I'm checking out your questions and your comments over here. By the way, I'll try to get to everybody's questions, comments in the chat over here. Yeah, let's feel free to participate as much as you want. I mean, I'm getting pretty comfortable with these webinars now, right? I kind of have a flow. Today I kind of feel like mixing it up a little bit though. So, well, let's back up for a second. So these dots here, I don't need the crosshair. Crosshair gets a little much for me. So the dots, oh, come on back here. Wednesday forecast. Here, check this out, everybody. It does not have the software. I'm gonna go back. I'm gonna show you folks where these dots come from. What are these times? Predictive time trading, what the heck is that? Well, Back to Future Trading, one of my favorite trading software company of all time. I mean, I agreed to do these webinars for like weeks, months actually. I've been accustomed. I love these guys. I love Michael and Ron, and I think they make the highest quality software available for trading. Anyway, so it's advanced predictive time trading. So every week, emails go out to 4,000 people, give or take 1,000. It's somewhere between 3 and 5. I don't actually know, but it's multiple thousands. And these emails contain, they go out on Tuesday, and these emails contain the times for reversals, for buying times and selling times, these windows, for all day Wednesday, regular trading hours, and all day Thursday, regular trading hours. So if you wanted to find them without the email, you go to trading, oops, I'm sorry, not Trading Insights. About is what I meant to pick. Back here, about. Live weekly webinars. That's what we're on right now. And then we will scroll down just a bit. Follow along with our weekly training webinars. Every week we put on TimeWarp projections up for Wednesday and Thursday on Tuesday night Eastern times. So you can register here. So let's go to TimeWarp projections. I mean, for anybody who's seeing this for the first time, this must seem insane. But for all of us who have the software, we know it's not insane. It's just simply data mining. It's historical data mining with 12,000 lines of code with a very robust professional grade software. So forecast review. So we just go to here to Wednesday. We're on Thursday, so let's take a look at Thursday. And then here you have these projections. Can't change them. We sent the emails out on Tuesday. So these are the times, whether I like it or not, these are the times that I have to deal with during my webinar, and they were forecast out from 2 days prior, which is pretty insane, So here's the ES 3-minute. This is what we're going to be looking at primarily today. And if I zoom in, you can see right there on the website, and they've been these things have been posted on here since Tuesday night, as long as the emails. So there's the times, and here are the times. So we can do something like this. And we'll probably be here for a couple hours, just for anybody who hasn't been here. I like to have a good time, you know. So here's the histogram down here. Same exact times. This is California time versus East Coast time. So they are the same times. They are just going to make sure that the indicator is set up with the right settings, just so everybody can see. TimeWarp. Swing 8, calendar days, 7/14, never changes for I don't even know how many years. Many years have been the same exact settings every Tuesday when the signals get sent out. All right. Okay, sweet. Everything looks good on that. Let's drag slideshow in. That's me. I'm Jake Royall. There's my dog, Lexi Royall. That's up in Tahoe from last year. We're going to talk about tools today. Not Grammy's hammer. We're going to talk about professional, real, big boy, big girl tools, big girl, big boy hammers. I'm not showing up to a brand new job site with this little hammer down here. If anybody does, you know, I want the best tool for the job, and that's what we're working with here. We're working with the best tool for the job. As far as I'm concerned, it absolutely is. Results for me have been fantastic. I've qualified for 4 Apex funded accounts. Those trading combines are not easy to pass. I'm actually 75% of the way there to qualifying for my 5th one as well. So that's cool. So Back to the Future is the only company online that gives the times and directions in advance. Plus, we give you the trading rules in advance. I have my own set of rules, and there's also, you know, a defined set of rules from Michael and Ron. And basically, I use their rules. I don't like try to rewrite the textbook. I just put a couple of profit targets in there and do this little open price line thing. I mean, it's a little bit of my stuff that we'll go over, but it's all based on Michael and Ron's foundation. And then, yeah, so we give the rules in advance, let the times and setups pass. 2 days later, we add up the results for a pass or fail. So that's what we're going to do on the ES 3-minute. If we can get to some other charts, cool. So my big thesis is that although the world looks messy and chaotic, if you translate it into the world of numbers and shapes, patterns emerge, and you start to understand why things are the way that they are. I completely agree, Marcus. Completely agree. Look at this guy. How could you not agree with this guy? Look at this little guy. Gee, what's wrong with you? Just get warmed up. Just get warmed up. All right, okay. I'm gonna have some kombucha. Remember when you folks first started trading? Does anybody remember when they saw their first chart? My first chart that I ever saw looked very similar to this. There's a black background, red and green candles, and there was a lot of up and down, squiggliness with these weird little lines on the top of the green and red things. And it was a while before I even knew what a buying candle versus a selling candle was in regards to the close and the open and what the wick meant. I mean, just even that took me a little while to figure out. And then we're supposed to, as traders, we're supposed to figure out double bottoms and double tops and flags and head and shoulders, all correlate that with support and resistance and the trend line break. And why not just go ahead and add order flow in there? Better have your super dome up. What about your triple sow cow, double backflip, flag, pennant reversal with the side of hot steamed milk? No. And I did, and a Fibonacci retracements with the extension, and like stresses me out even just like riffing on that. I don't worry about any of that stuff anymore. I really don't. And I went down the rabbit hole on like every single one of those things that I rattled off, even the side of steam milk. I pretty much, well, maybe not the side of steam milk, but I went down the rabbit holes on all of those many times, many different iterations. I mean, here we can see what double bottom, but this double bottom, well, geez, there's actually a head and shoulders right there. Then we have, I mean, this is an angled head and shoulders. Oh, there's a higher high. Look, there's a higher high, then there's a higher high, then there's a higher high with a higher low, higher high, and consolidate and then drop. And then, oh, look at that head and shoulders right there. And then, oh, look at this flag. Oh, is that a bull flag? Oh, geez, it actually just went the other way. Oh, maybe that's because there's a double top here and then a consolidation beforehand. And oh, well, it's a time of day. And then what's the volume like down there? Dude. When I show you folks, if you haven't seen it, when I show you folks my system, it's I do these private mentorship meetings. Not that you really even need them. You can pretty much learn it from just watching the webinars. But a lot of people like it. So, you know, if you do want a private mentor meeting with me, then shoot me an email, jacob@backtothefuturetrading.com. But I want this system to be so easy. And Michael and Ron's system that they teach is also very, very simple and easy. I just personally can't trade that. I'm just gonna speak honestly. I can't trade it because I emotionally can't hold my trades that long without taking profits in between. I need multiple positions. But this system is so easy. I wanted to design it so a 6th grader could trade it. My daughter's 7. My daughter is 7, and I feel like if I really sat down with her for a week, not 8 hours a day or anything, but for a week or two, I could teach her from the ground up what a candle close, what a bullish candle close, top, bottom, open price line, staggered targets. I think I could probably teach her my strategy. She's only 7. But I want basically any 6th grader to be able to do it because we have so many emotions to deal with while we're trading. I don't want to be thinking about deltas and order flows and volume correlations and upside down triple sow cows. So what this software does is it takes out the need for all that. And then I'm not saying that you can't correlate your previous knowledge of all those patterns. Go for it. I don't really want to do it. I mean, I can't help but see things. But yeah, the edge works, hypothetically speaking. Of course, so what the 12,000 lines of code do is it goes back in the historical data that NinjaTrader provides, that your data feed provides, and it finds repeating swing points. And once a threshold of repetition is reached as far as the code is concerned, it then projects that time out into the future. It's not woo-woo. It's not magic. It's data mining. It's logic. It's computer-based software. And does it cost money? Heck yes, it costs money. It's professional. Like, you think you're gonna you think these hammers are gonna? Here goes my rant. You think these hammers are just are free? Well, especially when they're brand new. I mean, they're a little used here, but I'm not giving away my favorite hammer for free. I'm not giving it just no. In fact, when I spent the money on the software originally, I told myself that was a good thing. I didn't complain about it. I was like, good, I'm spending money on this. That will help me stick to this system, to this software, and at least give me a shot of not deviating at least as much into like, oh, how could I add this in or above? Which, you know, I have tried many things, but that investment was in my mind an investment in my future that I needed to stick with it because I spent money on it. And just that alone has helped me substantially. So what software does, like looking at this, I don't know where the historical swing points are from 7, 14, 21, 28 days ago, which is what the software does. It goes way back in time, whatever you tell it to. And there's very particular settings for some markets that we have access to. We know what the best settings are for everything, but for intents and purposes today, we're using the same settings on everything because there's no pulling the wool over anybody's eyes. So the software goes and looks for swing points with thousands and thousands of lines of code, compiles it in the background, and then plots those beautiful, simple Zen-like dots out into the future and gives us a probability of reversal. Probability. What's up, 33 people? How's y'all doing? Tim, good to see you. Stanley, Shane, some more people coming on in. You think that trading, you think that is a good trading account to qualify for? Oh, yeah, Chris, Apex, definitely. Their support is amazing. And you know, it's a little complicated to set it up with your NinjaTrader, but I mean, I did it. My brother did it. My brother trades as well. And if you get stuck, you can actually email them and they'll help you out. But all funded trading accounts to set them up, no matter what company it is, if it's TickTick or Lulu or Apex, they're all a little, you know, the hardest part might be just setting the darn thing up, but it's not that bad. But the Apex support is fantastic, and they're all really similar nowadays. Yeah, no worries, Chris. They're all really similar as far as like how they operate once you get the accounts. So my experience, this is a quote, I might as well have this quote coming from myself. My experience with 36 interviews conducted for this book and its predecessor leave me with little doubt that the random walk theory is wrong. Not sure if anybody's read New Market Wizards. If you haven't, highly recommend reading all of them. I think there's 3 of them. There might be a new one that just came out. I'm not sure. Let me know if anybody has seen the newest one. So I already went over the Tuesday emails, then we look at Wednesday and Thursday and see how they did. And then, yeah, there's the signal, there's a dot, and that's the raw information. And then there's the setup, that's the specific trade rules that we're gonna go over. I'm also gonna do some dot to dot just for fun here on the ES, just to show everybody how that worked today. What do we got here? This is Ron's Pro Trading Room. If you choose to buy the software, which I hope you do if you don't have it, you can also have access, if you'd like, to the Pro Trading Room with Ron, Michael's partner. They are partners. And this is his equity curve in his Pro Trading Room over the last year, I believe. I should get him to send me an updated one. Oh, he hasn't really been in. He's been away for a month and a half. Somebody else Garrett's been running the room. I believe his name is Garrett. But that's pretty incredible. I mean, and that's there's recordings, so you can see that. You know, go into the recordings. This isn't fudged. And this one over here on the left, this is one of the Apex accounts that I qualified for, and that's ticks over there. This is using TachEon TimeWarp. So the whole idea is to know when in the future to be proactive versus just reacting all the time with lagging tools like MACD, stochastic crossovers, blah, 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 blah. So I'm assuming we all know that we're playing on an unlevel field with the institutions and the banks. I mean, here's the violation tracker industry summary page. Last week, we actually pulled up a live page, and Wells Fargo, I think, didn't have any. Wells Fargo's been slapped on the hand, on the wrist multiple times, even in the media over the last 10 years or so. So maybe the actual Wells Fargo's actually sent me a couple like $35 checks over the last year or two, saying, "Oh, sorry about that," because they were, I don't know what they were doing. And then Citigroup, JP Morgan, top offender, 82 billion, almost 83 billion dollars of penalties. And of course the government's like, oh yeah, no, don't do that. Just kidding, keep doing that. We really want your penalty money. And then it just keeps going around and around and around and around and around and around in circles. The idea with this software is to trade the bank times, to trade the penalties. It's like penalty shots. That's hilarious. I've never thought about it like that. It is. It's like trading penalty shots. Huh. I'm having a little sip of kombucha for that revelation. I love my metaphors. Love my metaphors. Okay, let's blow. I really want to get to the charts. So if anybody else, so this is the only other book that I'm going to recommend that anybody has not read, Trading in the Zone by Mark Douglas. Please read it at least once. I listened to it on Audible. I like to say read, but I listened to it on Audible 6 times. And I'm not saying that to brag. I'm saying that because that's how thick my skull is. So there is a random, this is directly from the book, there is a random distribution between wins and losses for any given set of variables that defines an edge. This truth makes trading a probability or numbers game. When you really believe that trading is simply, when you really believe it, that's why I needed to keep reading that book over and over and over and over again. When you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. As a result, here's the key right here. Expectations need to be in harmony with the possibilities. As a result, your expectations will be in harmony with the possibilities. I love that, just that one line. Man, I really love Mark Douglas, the late great. And if anybody, so Mark Douglas to me is the godfather of trading philosophies, like psychology philosophy, kind of, I guess you could say. And then this is my own personal opinion. And Randy Howell, what a shout out to Randy Howell. He actually reminds me of Mark Douglas. He actually looks a little bit like Mark Douglas. Randy Howell has helped me substantially by, he's a clinical psychologist. So he works only with traders, very popular guy in the trading world. And I took his course, and you don't even need to take his course. He's got a bunch of free videos on YouTube. I'm gonna just totally give him a shout out. I'm just gonna pull something up here. Because after I took his course and even just watching his free videos, I was somehow my body and my soul was able to get in alignment more with the ideas in trading in the zone. So almost trading in the zone is like a mental thing, and then Randy Howell helped me make that mental thing into a like more of a psychosomatic thing. Randy Howell, highly recommend his videos. Here he is. Hold on. Why do you gotta make it so hard for me? There you go. There you go. Doesn't he kind of look like Mark Douglas? Look at that picture. That's crazy, right? Hold on, check this out. Mark Douglas. I mean, it's kind of weird. Where was I? So here. Look at this. What? Really? I don't know why that trips me out so much. Maybe it's just because I love both of these guys so much, like they're a second dad to me. I mean, I really got into the Randy Howell psychology and the theory and practice of trading in the zone. So they're like one and the same person. And Randy Howell actually has he's a heart transplant survivor. So I don't know, who knows? I don't know whose heart it is. But thank you, Mark, and thank you, Randy. There's your shout outs. All right, so we're gonna get in charts here in a second. I want to go over Mark Douglas's 5 fundamental truths real quick, 7 principles of consistency. Then we're gonna check out some charts. Actually, you know what? Before I do that, I just want to show you folks where these times, they don't just come out of nowhere. I mean, there's these swing points, these blue dots and white dots, they come from, yeah, the 12,000 lines of code looking back in historical data, but what's happening at those times especially on markets like the NASDAQ, the S&P, well, I mean, yeah, you can crude reports, different gasoline oil companies having their business procedures, federal regulations, internal structure, internal meetings, even scheduled phone calls, payment receipts. There's a schedule to all this stuff. It's too complicated for my human mind to understand and be able to make predictive buying and selling windows, but the software does a pretty darn good job of it. I actually was talking to, during one of my mentor meetings, this gentleman yesterday was telling me that there's certain times where the algos, if you will, are turned on and turned off by the institutions. The market's not random. It's just not. So yeah, the big money leaves those big tracks, and that's what the software goes and finds. And that's why the software costs money, and it's totally worth it. If anybody is interested in buying software, again, Dave is the guy to contact. Shout out your number here, Dave. So if anybody to the YouTube record, which will be uploaded probably by, geez, Rachel's even getting it done by tonight. You know, Back to the Future is cool. I mean, there's only me as the mentor webinar guy. Then there's Dave. Then there's Rachel, who's the general manager of the company, and there's Michael and Ron, the founders and the creative engineers behind everything. Dave's number is 727-742-2626. So reach out to Dave. Yeah, I actually feel like going over these today before the fundamental truths. Shout out, it's all about shout outs for me right now. WD Gann. Time, what? I remember when I first started trading, I kept thinking, like, why is everybody talking about price and price action? Like, what about time? Isn't there something to do with time? And then I did get into some Fibonacci time extensions, and I got into that theory, and it was just, there's a lot there. But Gann's a huge fan of time. Time is the most important factor, actually, of all, and not until sufficient time has expired does any big move start up or down. Gann was a genius. I mean, he to me, he's the Tesla, the Nikolai Tesla of trading. Does everybody agree with that? Time is the most important factor in determining market movements. Not the second most, the most important factor in determining market movements. I mean, the more I watch the software, trade it every single day for 2 years, well, probably not every day, but a lot. I realize how important time is. Every day I realize it more and more. Time is the most important factor in determining market movements, and by studying the past records of the averages of individual stocks, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. There is a definite relation between time and price. Do I want to get into trying to figure out the square of 9 on a 30-second chart? No. We could go there. I don't want to teach a course on it. I don't want to even that's just, there's too much. Give me the blue dots, give me the white dots, please. Thank you. So Mark Douglas's 5 fundamental truths of trading. Number 1, anything can happen. Number 2, you don't need to know what is going to happen next in order to make money. Somebody commented on one of the, I can't remember what YouTube video, well, it's not YouTube video, one of the webinars that I did on YouTube. The comments aren't there anymore, so if you're listening, sir, I saw that comment and thought it was interesting, because what this gentleman commented on was, when I was going over the 5 fundamental truths here, number 2, you don't need to know what's going to happen next to make money. I said something to the effect of, I mean, you could put a monkey at a desk with a red button and a green button, and that monkey might end up in profit by the end of the day, buying just whenever he felt like it, pushing the green button, selling whenever. You don't actually need to know what's going to happen next to make money. You could just get lucky by pressing the green button and not pressing the red button for 4.5 minutes. So we don't actually need to know what's going to need. For some reason, he couldn't get the metaphor there. I wasn't saying that, that's recommended. The idea is to gain an edge. So number 3, there is a random distribution between wins and losses, and there it is. It's a random distribution between wins and losses for any given set of variables that define an edge. Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. Number 5, every moment in the market is unique. I love this one, number 5. Like, oh, I don't know. Well, that's looking like a flag. There's a white dot there. I don't know. Oh, I don't like the wicks. Dude, every moment in the market is unique. Is it your edge or not? Push the button. Push the button, Jake. Okay, all right. The 7 principles of consistency. Number 1, I objectively identify my edge. How many of you folks can objectively identify your edge and explain your trading strategy to someone who doesn't know it at all in, I don't know, 10 minutes or less? In show business, they call that an elevator pitch. Can everybody explain their trading strategy as an elevator pitch in 10 minutes or less. I almost want to say 5 minutes or less. We'll say we don't have to explain a long versus a short. So you just don't need to explain a long, and we can infer what the short rules are. 5-10 minutes, and you should be able to write it down. Otherwise, in my opinion, you probably shouldn't be trading. I'm not saying that I'm innocent of that, yeah, I have done things that aren't. I'm a trader. I'm a human being. I'm not a robot. But the goal is to stick with those rules like you're a robot, like you're an algorithm. Number 2, I predefine the risk of every trade. Number 3, I completely accept the risk, or I'm willing to let go of the trade. Number 4, I act on my edges without reservation or hesitation. Number 5, I pay myself as the market makes money available to me. Number 6, I continually monitor my susceptibility for making errors. Number 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. I hope everybody's seen these 5 fundamentals and these 7 principles. We could probably just keep doing this all day. To heck with the charts. This could be more important. Just this all day. The next hour and a half. Is that cool? Is that fine? No? Okay. We already went over to quotes on time. I think we're ready to look at some charts. So we're looking for a trail. We're looking for footprints. Where are they? So let's go see if we can find some. I mean, we definitely found some. Let me get rid of this background real quick. Let's put a little more margin on that. Well, you know, we'll just keep it at 150 for now. And then we'll get rid of the background image. So these are the exact same times that were sent out on Tuesday. Gonna clear all these drawing tools. Yes. Anybody trade the ES today? ES 3-minute? Oh my God, the slideshow's over. Oh. Okay, slideshow's over. I'm gonna take a second while I switch into chart mode. It's really 2 completely different brains, I feel like, that need to be used with the slideshow and charts. Anything? Hypothetical person that's here in the room with me, but not really. How's it going, Dave? Dave's watching. Chris is watching. All right, excuse me for a second. I'm gonna mute myself just for a second while I need to chug some protein powder and clear my head for like 30 seconds, not even 15 seconds, 30 seconds, something like that. 1 second. Okay. All right, I'm back. Tim, yeah, you agree? I need a little more audience participation. I thought I was like all alone for a second. Like there's a lot of people here. Does everybody know what a blue dot means? What a white dot means? Who doesn't know what a blue dot means on this chart, or is intended to infer? Anybody? Bueller? That never gets old to me. Like I feel like it should get old, the whole Bueller thing, but maybe it is getting old. I don't know. I still like it. I just like saying it. Bueller? Does anybody not know what a white dot is? All right, let's do some chat stuff here. I was born in a cabin in Maine, and I actually was just going into more of a New York accent. Let's not do that. Let's do a quick dot to dot on this day on the 3-minute chart. Here, where's the open? 6:30 a.m. is the open for me, my time, California. So for anybody who doesn't know, these little white dashed lines, these are the stop lines, which are I always have to remember that there's going to be people watching this on YouTube, and who knows? Who knows? No, maybe not have any idea what we're looking at here. So I do have to, you know, slow it down, slow it down. Let's just zoom in here a little bit more on this. Okay, let's start from the beginning here. White dots mean there has been historical significance of buying happening between 648 and 736. Blue dots are intended to infer and there has infer shorting for the market to go down to the downside, and that there has been historical significance of selling in the market between 736 and 827. For anybody who doesn't know, here's what the signals look like out in the future, before the price action, before the time gets to the dot. So we already know in advance that there's a 445 swing point down, 545 swing point up and down. It just goes up and down and up and down and up and down, up and down. You never get a white dot and another white dot, or a blue dot, then a blue dot, then a blue dot, then a white dot. Not in the simplest iteration of this this software's methodology, at least. Okay, so I'm gonna have an Altoid and get shut up here. All right. But as we know, we can't assume that the price at 445 is just going to come shooting down. I mean, here we go. This is not reasonable. That would be crazy. That would be too good to be true. Just move on from this video right now, because I'm a psychotic, delusional person who thinks that that's exactly what the market's going to do. Now, it might do something like this. This seems reasonable, right? Or maybe not this last one. Let's do something. Well, of course that's reasonable. So that's why I say that these are the windows in time. Oh, I always do that. Windows, selling window. Then we have a buying window. Oops. Shift F1, Shift F1, alert. Let's make that green. Let's go over real quick basics. I'm not going to spend more than 3 minutes on this. Forest green. There's the signal, then there's the window. I like to look at it as the window. There we go. And then there'll be a selling window. And then a buying window. Right? Everybody knows. Except for the people who are watching on YouTube later, maybe you don't know. So what the software is all about. Predicting, or at least giving us a higher probability. That's what the software does. That's a really nice higher probability too. So up and down and up and down and up and down and up and down. So let's see. Well, first let me show you what these dots mean. The dot price line. The dot price line is this little dotted line right here. This little dotted line is placed by the software automatically. The settings are right now 1.5 times the average true range of the last 7 bars. 1, 2, 3, 4, 5, 6, 7. The last 7 bars, average true range times 1.5 is this distance. Does that make sense? 7 bars, that times 1.5 of the average. And software plots those automatically, and we call that stop price line or the dot price line. For the real quick test that we're gonna do dot to dot, if the price comes down and hits this stop line, we have to call that a loss. If it doesn't, then we most likely it would be a win or a break even. So white means up, blue means down. All we're going to do is we're not even going to, let's to heck with even the moving average for this. Let's get the moving average off of here just for a second. So anybody who doesn't know, I use a 21 period whole moving average. I'm used to seeing that panel on there. I think Michael wanted me to put the panel on, so there it is. So let's just turn that off for a second. None. What? Why is it still on there? Oh, I think I have their other one on there. Let's get rid of that. There we go. So all we're going to do is just buy at the white dot, let go of that long, and then short at the blue dot, let go of that short, buy at the white dot. So let's do it real quick, and then we'll just tally up this day. It can either be the micro or the ES. Might be more exciting to use the mini contracts, but either way, the signals are almost always the same. So buy, sell, 100 ticks, sell, let go, buy, let go, moving along, sell, let go, buy. Did it come down and hit the stop? Nope, just barely. Let's zoom in on that puppy just to make sure. Nope. There's a reason that they're 1.5 ATR away. Look at that. It's incredible. It's an incredible little stop run. Okay, moving along. And here's one that gets stopped out. Selling and stopped out here. Selling here. Does not hit the stop. And we're out. Buying. Ding, ding, ding. And we're out. And selling. And we're out at a stop. 12:54, almost done for the day. And well, let's see. So 115. Let's just hold this to 115, I guess. Where would that be? Get the crosshair out. 15. So it looks like this one would be a break even. So we would be in. Wow, that's tempting, and it's hard to let it come all the way back like that, which is why I have a modified version of this very simple strategy that I'm going to go over it with it for everybody on the same exact chart. But for now, let's just total these. Let's just total these up. It's going to be pretty easy. Calculator, come to me. Come to me. Got to keep them calculated. All right, so we're going to total up all the wins, and then we're going to subtract the losses. I mean, obviously this is a fantastic day, but I didn't cherry pick this day. I mean, we can only test Wednesday and Thursday. Let's see, so I'm at 77 plus 14, 37, 60, 43, 2, minus 18, minus 23, 277 times $12.50 a tick is a $3,400 day with just one mini. If we're trading micros, that would be a $340 day. If you want to times 0.2, so you can take out 700 for slippage and commissions, 20% or so. I mean, you're still looking at like a $2,800 day, something like that, with just one mini contract, or 280 with one micro. So there's the dot-to-dot method on the ES. Should we go look at yesterday too? Let's go look at yesterday, because yesterday was that short interest day. I don't want to make it seem like I'm cherry picking one day. I honestly have no clue how yesterday was gnarly. It was rangy and choppy and just, oh my goodness, look at this. I didn't even look at the ES yesterday. And we're not having anything to do with moving average. We're not having anything to do with puncture trades, which this would have been one, by the way. We're just going to call that a stop. Okay, so here's the open, 6:30 here, and let's go find the close. G, F7, 15, G. Yep, all right. So same exact rules, which is, I mean, it doesn't get any simpler than this. Charlotte could trade this thing. Okay, so 6, oh, here's a frustrating one. Comes all the way down and we to what, 53 ticks and then right back against. This one. Straight down into the stop. Actually, there is a reason for this. And it's actually in your histogram guidebook for anybody who doesn't have the software. That's a pattern 5. So that's not surprising to me whatsoever that white dot went careening towards the nether regions. Short at 751, long 806, short, long. Oh, that was sloppy. Sloppy Joe, sloppy Joe. 19, it's a 20, 10, 18. Short, loss. Yeah, see, this day was, I don't think it would be fair not to show this shenanigans. But we're gonna go back and we're gonna test my strategy on, because I actually really have no idea. I'm gonna test my strategy on the ES. Maybe we should just do the ES for 5 weeks, since we did the NASDAQ for 5 weeks. So we'll test with dot to dot like this, and then we'll throw my strategy on there and see if it does any better. And long and short and long. Remember, we're not using moving average or anything. This is simply just dot to dot, folks. And short. I think I fudged this one by like 2 ticks. Yeah, there it is. Okay. Do you folks ever watch Bob Ross back in the day? Bob Ross fans? What if I just talk like this the whole time and there's no accidents in trading? There's only happy accidents. There's no mistakes in trading. There's only happy accidents. I would lull you folks to sleep. It's time for your afternoon nap. Calculator. Let me see if I can get all of this in one screenshot. There we go. Okay, so we'll do all the wins first, and we'll subtract the losses. Clear. Hopefully it's trees, bushes, water, mountaintops. 70 plus 33 plus 15 plus 3 plus 13 plus 30 plus 12. 176 minus 2 minus 23 minus 28 minus 2 minus 41 minus 27. 53 sticks still. Hot diddly dang. Times 1250. 662 on a short interest day of nastiness. That's cool. So we have one nasty day range. I mean, you can see the range. I mean, anybody can see that. Ah, no, why? No, come back. No, stop. Help. Okay, all right. $662 times, I don't know, 0.2, 132, still call that $500 with one mini contract, $50 with one micro. So can somebody keep track of that? Oh, hey, Ian, how's it going? Good to see you. Tim Murphy, oh, you're gone. Does anybody want to keep track of this for me? Or we can just do a mental note. So it was like what's called 3,000 or so, 3,200 for today, one on the ES, and then let's just do mini so we can stick with one thing. And I don't know, $500 for today. We'll call it like 3,500, something like that. No, Doug, not going to do that. I like ticks and I will stick with ticks. because actually, Doug, of the strategy that I use, I need to know really quickly what the ticks are so I can move stops to break even and adjust things with ATM on the fly. Would anybody else rather use currency? I don't know why. I don't know. I just don't use it. But we can. I don't know. I'm not gonna do it all over again. I've always done all my calculations in ticks, and it stresses me out to even think about trying to change it now. I mean, this is really loose anyway. You know, there's going to be slippage and commissions. That was just a really loose. We're actually going to bust out a spreadsheet when we start tallying up my stuff. What's up, Yusuf? How's it going? Good to see you. Where am I? What are we doing? Hello? Dealer? Oh, backward wheeler. All right. Does anybody have any questions on dot to dot? Chris says ticks are fine. Okay, thanks, Chris. Is anybody here not a customer yet? Because we have to keep in mind what this meeting is, what this Thursday webinar is for. I think there's two purposes. One is obviously for us as customers to get together and learn some new stuff and reinforce some ideas and tactics. And then the other main purpose for this Thursday webinar is to get new people on board with the software, trading with us. So I wish whoever didn't have the software would just let me know in the question field, because it's really hard to tell. I mean, there's like 30 of us here, and I don't know. I mean, I recognize a lot of these names, but I don't recognize multiple. So if anybody's not a customer, please let me know, because I need to know who I'm speaking to. But then again, there's the YouTube thing. So yeah, I just gotta take it step by step. Hopefully some of you folks have seen the webinars that I had put on the last 5 weeks, because we're gonna use the same exact strategy. I'm just gonna go over it real quick. And I guess we can start a new spreadsheet, but you know what? Before we do that, check this out. Before we do that, let's check this out. For anybody who hasn't seen this, take a gander. Use a gander at this. So these are the results for the last 4 weeks. I keep saying I need to get the first 2 weeks. I lost the spreadsheet on the first 2 days, but you can go back and you can watch that first webinar that I did in this series. This is the 6th one now. And I believe it was like a $4,000 day and like a $2,000 day. They certainly were not break even or losers. Anyway, we have 8 days on this spreadsheet, all back tested live on the Thursday webinar from the signals that were on standard settings that were sent out in emails prior to the webinar. So it's not like I switched the settings or the signals around or anything. And I honestly, hand on a Bible, really, I didn't trade any of these days the full day. So I didn't really know how the days were going to work out with my strategy. I was basically hoping and praying, like, I hope I don't really embarrass myself here. I hope this works out as well as I think it should. And it did. So let's zoom in here. This is 8 days of data over the last 4 weeks of webinars. I need to add that 5th week in here, but like I said, those were definitely winning days. You can go back and prove it by just watching that first webinar that I did in the series. So with the NASDAQ, regular NASDAQ mini contracts in 8 days, we had, what is that, 21,000 or so. This is the equity curve. Quite nice, quite nice. And we can see our trade data over here, our wins and our losses. The losses with this strategy will always come in sets of 3, because we're trading with 3 positions. Sometimes all 3 positions will get stopped out. Sometimes 2 of the positions will be winners and the other will be a break even. Or every once in a while you have 3 winners. So it comes in sets of 3. But as anyone can see, just from looking at that beautiful visual there, I mean, look at that. It's just a thing of beauty. The winners are when I developed the strategy that I'm about to share with you folks. I mean, first of all, it really actually is the strategy that I use every day. I mean, I put a couple more things in there, but you don't need to. I I mean, this is the simplest iteration of this Royal Warp strategy, as I call it. It's thinking works in its simplest form. So I'm gonna say, let's see. Yeah, I mean, you can just see it in the visuals. And then if we go down to the bottom of the spreadsheet, you can see, and this is after commissions too, mind you. I'm using $5 per contract per commission. This crazy number right here, this is, there's this thing called the Ryan Jones scaling method, or some people, you could also call it fixed ratio. I'm sorry, not fixed fractional, fixed ratio trading. So I have this number here really large, so the fixed ratio does not kick in. So you figure out the delta, and I can help anybody with figuring all this stuff out, spreadsheets and whatever, in a private mentor meeting, if you like, Jacob at backtothefuturetrading.com. But this number is very large just so that the scaling doesn't kick in. I want one contract per each of these, so I just made it some huge number so it wouldn't. And then this one right here, that's also, it could be argued that that's a Ryan Jones method too. It's, you use a moving average on your equity curve, made that one, so that would not kick in either. So at 8 days, we're at 21,700 after commissions. If you took with this strategy, if you took every single trade throughout the trading day from all regular trading hours, from the open to the close in 8 days, there was one small loss day of, I think it was like $700, and then there was a break-even day and another break-even day, and then the winning days were like, they're just massive. I mean, look at this, 39. And the 3, 4, so that's 2. There's a few. There's a couple $6,000 days, a couple 2,000, a couple 3,000. But yeah, just wanted to show you folks that. And also, has anybody ever done a Monte Carlo analysis? Check this out, because I want to do this with the ES too. We'll do the ES for the next 5 weeks or 4 weeks. 4 weeks, I guess, 4 or 5 weeks. So this is a Monte Carlo analysis of the exact same trades. Oh, excuse me for a second. Is that a stretch? Okay. My lord, am I saying that right? Ask, do you trade NASDAQ, S&P? Yeah, every once in a while I'll trade them both. The other market besides NASDAQ that I have the most experience with is the S&P, yeah, the ES, the MES. So this is a Monte Carlo analysis. Over here is a random number generator on the Excel sheet, and what you do for a Monte Carlo analysis is you want to be able to rearrange these are the ticks, these are the contracts. So I want to make sure that we have one contract for every trade. So we're good on that. Everybody can see that we have one contract. Let's make all that the same color. And then let's make all this the same color. These are the ticks here. So the random number generator throws a bunch of random numbers in here, and then all you do is you draw a box around the random numbers, and the ticks won or lost, and then you go to sort and sort largest to smallest. You can do that, then smallest to largest. Then you can switch the random number generator to, I mean, you could do point anything you want, 5, 5, and it'll switch all of the numbers again, and then you could resort, and so on and so on and so on. So however I've sorted these trades for 200, I mean, dude, I mean, check it out. For anybody who's just watching the YouTube recording, 226 positions in the market. You'd have to divide this by 3 if you want to see how many trades were taken. I don't know. I don't necessarily agree with that either. I'm calling it 226 trades because each position has its own rule. There's a target 1, there's a target 2, and there's a runner. So there's the same entry point, but they're different exit points. So they're different trades. So 226 trades. I don't know if anybody wants to argue with me on that, go for it, but whatever, it's 226 trades. And no matter how I organize the ticks won or lost, it comes to 20, 25,000, something like that. But what's really cool about Monte Carlo analysis is you can figure out what you can't figure out exactly, but you can get an idea of what your max drawdown is going to be. And once you have an idea of what your max drawdown is going to be, so say we, okay, so like look at this here. So we got up to 15,000 and then we drop down to, I don't know, 13,000 or so. So there's a $2,000 drawdown. I mean, this is a pretty, like, let's look for the biggest drawdown in this Monte Carlo scenario. So we're at 23,665, it says, and then down at this trough, we're at 21,405. So 23,5, 21,4. So so it's a couple thousand, it's a couple $1,000 drawdown. So if you're using the Ryan Jones method, you'd figure out what your max drawdown is. I mean, we could even, it's probably going to be more than 2,000. I'd make it 3,000. So if we make the max drawdown even more than that, let's go 4,000, double it. And then to figure out your delta, you actually cut that in half. So now we're back to 2,000. So this is very, very conservative Ryan Jones fixed ratio delta. This is called the delta. So figure out what your max drawdown is, divide it 2, throw it up here in this box. Well, I mean, shoot, let's just make the delta 2,500. It's really pretty conservative. Let me make it so you can see the. Hold on a second. Oh, well, you know what? Using the Ryan here. Well, you know what? We shouldn't bother with the Ryan Jones method on this spreadsheet because the trades are not organized and in the same entries. So, but we could do that on the other spreadsheet. So that's why I had that as. So that's more realistic. No scaling. But that's a whole other thing. But we could do that here on the regular spreadsheet, and we could call it what were we using? 2,500. And if you folks remember, there was a couple days where on here on the spreadsheet where I entered in all of the wins, right, and then all of the losses. So it's kind of a combination of using Monte Carlo and the trade by trade. But either way, I mean, if you make it a $2,500 delta or a 5,000, might be more reasonable. That's a little more reasonable. But this is some cool stuff that one can do with spreadsheets to figure out how you could scale. I mean, even if you make it 10,000. So that's a whole rabbit hole that we could go down. But let's not do that. Because the data on those spreadsheets actually isn't organized well enough to produce an equity curve that's in accordance with the necessary components of the Ryan Jones scaling method. We could say I would need to make sure that the trades are actually in order, and there's two days that aren't in order. But that doesn't affect where the equity curve ends up without scaling. But man, if you ever have done a back test where you've actually applied scaling properly, to see that happen is really, really cool and inspiring to keep going in this trading thing that we do. Because you can have crushing days. It's a really hard. I mean, it could be argued that trading is one of the hardest jobs in the world, and you're just sitting at a desk, like ice road trucker, working on a crab boat in Alaska. So let's go over, what time is it? 2:24? Oh, sweet. Okay. Not too bad. I usually go for, like, I don't know, an hour and 45 minutes or so. Let's clear all the drawing tools. So we remember that these 2 days on the ES 3-minute were like 3,500 or something, right? Doesn't need to be exact. Let's clear all the drawing tools. I mean, we definitely have an edge even just doing that. So let's find a really easy, I mean, right off the bat here, here's a really easy example of the simplest iteration of the methodology that I teach on the one-on-one mentor meetings. And sometimes people just want me to help them set up their ATMs, or maybe they're new to NinjaTrader. I can help with that stuff. I love helping people. with all sorts of stuff when it comes to trading. All right, so as we know, white dot means up, blue dot means down. So with let me get rid of this so we just have more. With this strategy, we're gonna have 3 positions. And we do need the whole moving average on. It's gonna be a 21 whole moving average, invented by an Australian gentleman. Shout out to Australia. My ex-wife is Australian. My daughter is actually half Australian. Mr. Hull invented this beautiful moving average, and don't quote me on this, but it has something to do with using more recent price action, almost like a weighted moving average, but then also incorporating the square root of that more recent price action, and then that's why it's so responsive, but it's not choppy. It's insane. It's by far my favorite moving average. So we'll just come down here in settings, moving average type. This all comes right with the software. Whole moving average, 21. Okay. There it is. I mean, just look at how beautiful, look at that. I mean, it's almost unbelievable. So with this strategy, we can think of it as almost like a color coding system. For going long, we need a white dot, a white open price line. What's that you say? A white open price line. What? This is an open price line, or an OPL, open price line. It actually prints right at the close of the signal candle, or you could say it prints at the open of the candle after. Not sure why it's called an open price line where it prints on the close, but we call them open price lines. So we need a white dot, a white open price line, and a white moving average. So we need 3 things to be in alignment to get into our trade here. So let's get a little more margin going. Let's go 350. So we can kind of make our chart disappear on the side here. Okay, so working with this trade here at 6:48, market opens, Santa Barbara time, 6:30 a.m. Okay, right now I'm just gonna look at the 6:48 signal. I'm gonna show you folks how a long is entered, the criteria for entering a long. Well, we need a white dot, and then we need a close. We need a white dot, we need a white whole moving average, and we need a close above the open price line. So we don't enter on the signal candle, we enter on whatever candle out of however many candles are in this window, this buying window. That's the candle that we're going to enter on. Sometimes it's the candle right after the signal candle. Sometimes it's 5 candles later, but you need to stare at the chart for however many candles it takes to get into the trade. Then you can set up auto ATM on the fly with the tab. It's not that hard to do, and then you can go make some eggs and just come back and close your positions when the next dot appears. So let's see if the next candle is does indeed close above the open price line. It does not, so we're still waiting. Plus we have a blue whole moving average. Here at the same exact time, our whole moving average turns white and our candle closes above the open price line. So we're allowed to enter. How do we enter? We enter on a market order long. Very easy. Simply press buy market. Here, let me get my chart trader up. I just want to make sure I'm in sim. Okay. Very, very easy. White dot, white moving average, close above the white open price line, buy market. Then what? Well, we're entering 3 positions at the same time with an ATM that looks like this. Well, this isn't for the this is for the NASDAQ, but we want all of our stops to be placed at the same spot, and then we want our targets spread out into 3. Each market and time frame. You just need a starting point with an ATM like that. So very simply, this is our entry candle, our candle of significance, if you will. Our entry is going to be right here at the close of that candle. We might have some slippage, plus or minus a few ticks. That's fine. You'll have that. It's trading. It's not It's not a precise, I don't care what anybody says, trading is not precise. There's always going to be something. I don't care if you put your limit order on 1111 and 11 cents. That doesn't mean it's going to get filled right there. There could be slippage even on that. So wherever you enter, that's where you enter. But the idea is to push buy market as soon as this candle closes. Watch your bar timer count down and get ready. All three stops are going to be placed right here. And then we're going to have a target 1, a target 2, and a runner. Let's see if I can. Just want to show you folks what it looks like. Actually, I haven't done this on the other webinars. This one might work. Making sure I'm not connected to anything. Oh, whereas probably some. Oh, there we go. Just wanted to show you what it looks like. I have an alarm going off right now, and I'm going to shut that alarm off by just doing that. So here's what your entry would look like initially. Okay, and then the idea is to bring those. Oops, let's use a different line for that. So we'll say here's one of the targets, here's where the ATM placed the other one, and here's where the ATM placed the third one. And then let's see, I can just copy these. All your stops were placed down here, we'll say. Then we want to move our stops where they're supposed to be. It's all going to happen at the same time. Move our target 1 to where it's supposed to be, target 2 where it's supposed to be, and our runner, we just want that up out of the way, right? And that's like the equivalent of moving your stop toss to where it's supposed to be. Well, we could do it like this. Pretend that this is how the order was placed. Well, we need to get our stop loss where it's supposed to be, target here, move this one out of the way. That's our runner. Really simple. Oh, I need to shut that alarm off again. I'm not sure if anybody's done this, but I literally made my own wave file of my own voice talking into my phone. I found a little app that you can record wave files, and then I sent it to my computer, downloaded it from my email, and then placed it in the NinjaTrader alert file location for order filled. You folks know the order filled voice. So I replaced that with my own voice and about a minute and a half speech of me telling me to follow my rules, relax, it's okay, breathe, chill, it's all good, blah 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 blah. So I have that go off every single time I push buy or sell or exit. Maybe I should switch the exit. I don't know if you can. Anyway, let's get rid of that. Okay, and then the other cool thing about this strategy is once we hit our target 1, let me go ahead and let's call it T1, T2, oops, T2, runner, 3 stops. Enter positions. Let's get rid of that. There we go. So your entry is here at the close of this candle. Target 2 is here. Target 1 is here. And the runner's anywhere you want, just out of the way. Does that all make sense? Doug, you like the female voice better? Yeah, I need to find. Actually, I have a couple female. I have a couple female friends. Maybe I can have them just read a script for me or something. Maybe there's a converter. I do. Yeah, I hear you on the female voice. Maybe I'm just making sure we don't have any questions. In the chart settings, Ian, I'm all standard settings. Always with all the webinars that I do. I never want to mess with all of the other webinars that have ever been done over the years with TachEon TimeWarp. So we have the same exact settings: swing 8, calendar days 7, 14, and the ATR period is 7, offset 1.5. The only thing that I've changed, well, it's not really changing anything. I just, the 21 HMA instead of a 120. We're not changing the signals at all. All right, so we're in the market. Now we hit target 1, sweet. Well, that's out of the picture. That means one of these stops is out of the picture. We have 2 stops left. We have a target 2 and a runner. So here's the cool thing. As soon as that target 1 is hit, then I move my remaining stops to break even, and we're risk-free for the remainder of the trade. There's different ways that we can go about that. As far as scaling the T2 or the runner, trailing. I said scaling, I meant trailing. Target 2 is hit here. Well, we don't need that anymore. Take that stop out of the way. We have 1 stop left, and we're hopefully gonna end up higher and higher and higher by the time the next signal arrives. So here we go. And we do. So our runner is closed here at the selling time of 7:36. So this trade would have been entry 1, target 1, entry 2, target 2. It's kind of fascinating how often target 1 will get hit right on this fib line. This is just a Fibonacci tool that I converted into a risk reward tool, the specific settings. If anybody wants it, send me, or doesn't have it yet, please send me an email to jacob@backtothefuturetrading.com, and I can send you the file, and you can download this just so you don't have to make it yourself. It's kind of a pain, but I can send it to you. It's pretty easy. And then target 3, if you will, isn't really a target. It's just whenever that time expires, that's the runner. So there's our 3 positions, 29, 59, 86. So let's go over one. Well, short's going to be the exact same thing. We can go over it a lot quicker. So we're waiting. We're in a selling window at 7:36. Our whole moving average is white. We need a whole moving average to turn blue, and we need to close below the open price line. We just need 3. There's 3 locks to this system that all need to be unlocked before we're allowed to enter. Okay, just at the same time again. So our whole moving average turns blue. We're in the blue window, and we close below the blue open price line. Blue, blue, blue. Okay, we're in. So all 3 positions in. Sell market. Hold on a second. Let me get this error out of the way. I keep doing that. And once I place this fib tool, I just anchor it. My Royal fib tool, my Royal risk versus reward tool, because my last name is Royal, and it just kind of works well with naming things. But once I have it anchored here, all I'm doing is I'm staring at this wick. I'm just going to drag that red stop line to where the wick is. Now, if you get your order, just as a little more detail for people who've been here for a few webinars, if your order gets filled back here or up here, that's fine. There's nothing you can do about that. However, when I'm drawing my risk reward tool, I do want to place that directly on the close of the candle that punctured the open price line, the candle of significance here, the entry candle. And I want my stop line placed right on that wick, as precise as I can get it. Now, when I place my stop, I'm going to cheat a little bit, and that's, you know, this is what the spreadsheet actually incorporates this. So don't freak out. On the ES, probably like, I don't know. Let's see, 3 ticks, 4 ticks on ES 3 minute. Let's not go more. 5 ticks actually seems like a lot. We gotta agree with something. What do you folks think? Because we're starting the first webinar here where we're going to start keeping track of all this stuff on a spreadsheet. On the NASDAQ, I was allowed to move my stop away by like 15 ticks, I think, or was I saying 10? It was either 10 or 15. Didn't seem to make a difference on like 95% of the trades. But on the ES 3 minute, I don't want to be right on the line, because time and time again, I have seen the price with the NASDAQ at least. No, S&P doesn't move exactly like the NASDAQ, of course, but I have seen the NASDAQ come right to that line, take my order out, and then go all the way to target 2. often enough where I will not place my stinking stop loss right on the wick of the entry candle. I will place it 10, 15 ticks above. So with the ES, you think 5 is okay? Anybody who trades the ES more than I do, you think 5 is like a good buffer for a 3-minute? Don, that's a really good question. I don't. No different settings. Not for the NASDAQ at least. I mean, I've tried to swing 5. Swing 5 with the NASDAQ seems to work well, but I haven't messed with anything besides that. I use a swing 8 actually. Swing 5 can be really nice though. And you know, same with the ES. I still use calendar days, 7/14 though. The only thing I'll adjust is, but I've tried to adjust all sorts of stuff. I even hired an employee named George to help me backtest over 5,000 trades when I first got this software 2 years ago. If anybody's on the fence about buying this thing, please don't be on the fence. Get off the fence and get out your wallet and hand your card to Dave, 727-742-2626. He wants to hook you up with, in my personal opinion, the most amazing trading software on YouTube in the world. The most amazing data mining engineer. I mean, Michael's an engineer by education. I mean, this is like, and then we're working with top programmers in the United States. This is all American. It's all American company right here. But we do love our foreigners. We do. Where was I? 5 ticks? Is that all right? I need somebody to help me. I hadn't thought about this before the meeting. What should my buffer be here? It needs to be something. 3? How about 3? Somebody? Anybody? Yes? 3 or 5? I'm going to keep going. Let me know what you folks think. 5? Okay, Dave. We'll just do 5. Thank you. Okay, so now all we need is, let's target 2, target 1, and the runner. So I'm explaining a short right now, but I feel like I was able to explain this long, even though I was like, you know, putting graphics and doing all that stuff. I think I was able to do it in less than 10 minutes, explain my strategy. I think, yeah, if I have good flow, I can do it in like 5 minutes probably. Okay, so we're in a short. We got a target 1, we got our target 2, we got a runner out there, we've hit sell market, and then we just need to move our targets into where they need to be. We got 3 stops up here, all in the same location. We've moved our target 2 to where it's supposed to be. We've moved our target 1 to where it's supposed to be. Our runner, yeah, I just want to copy this over. And our 3 stops are here, about 5 ticks above the wick of that candle. So moving along, oh, bam, target 1. Ching, ching, ching. Now that we've hit target 1, we only have 2 stops remaining. Those 2 stops get moved to break even. And there's a way to do that with NinjaTrader. Clicking the stop tab, and then you can set up auto break even while you're in the midst of a trade. You can adjust your ATM strategy. It's actually not that hard to do. And we'll look for, oh, there it is. I'm just going to drag this all the way. See this line over here? That's where the next that's where the buying window starts. So I'm just going to drag this over to that area. As we can see here, we hit our target 2. Let's get that out of the way. Well, we only have 1 stop left, and we're just holding and running, and we hold till the time of 8:27. So we had entered, and we'll exit. There's a host of different ways in which a trader could trail this runner, but for all of the back tests that we've done so far on all of the weeks, we have not trailed the runner. We just hold it and exit at the next signal. Now, if target 1 or target 2 isn't hit by the time we get to our next dot, we have to close all 3 positions no matter what, absolutely no question. And you make your 3 positions profit or loss. That's just how it is. On to the next one. I mean, don't expect to win every trade with this strategy. That's unreasonable. Expect a opportunity cost. Opportunity cost. You can't expect to go to war with another country and not lose some soldiers. So it does happen, but at the end of the day, are we winning the battle? Is there an edge? I would argue absolutely. So everybody get that? Don, let me see. Let's see what you got here, Don. How do you know when the market, it's a really good question. How do you know when the market is in chop where the signals aren't so accurate? Do you skip the signals or just trade every signal and hope for the best? I just trade every signal and hope for the best. I'm just going to continue doing what I've been doing in the last 5 webinars. I don't want to add anything, take anything away. There's ways that you can maybe adjust that. You can use something like the ADX to tell you if you're ranging or trending, and you could adjust your methodology based on that. You could use even something called the choppiness index, and you could adjust your methodology based on that. Or you could say that there's some dots that are really close to each other. I think maybe that's what you're referring to, Don. Yeah, you got to be brave. It's like, that's what I'm trying to be more and more every day, is just braver and braver and braver, and just like click the button, put the blind, click the button. That's what I love about this strategy. Click the button, adjust your stops, set your ATM. I can do it all in like 30 seconds. And then I can put a blindfold on and then set an alarm at 8:25, a couple minutes before 8:27, to come back over to the computer. I mean, I don't do this, but one could. I have actually. I mean, it definitely can be done. Actually, sometimes it's really nice. Like, oh, I'm gonna meditate. It's one of these long windows here from 7:36 to 8:27. That's an hour. Like, oh, maybe I'll get a 20-minute meditation in here. If it wins, if it loses, it just is what it is. And my alarm will go off at 8:25, and I'll come over and see what happened. And then I'll push close at 8:27, close of that candle. Yeah, that's all there is to it, really. So yeah, that trade looked like it was accurate. Let me see if I can find. I don't think we're gonna. We do have some that we're gonna have to contend with. Let me see if I can find a really easy one to deal with. Excellent. Here we go, right here. I don't trade pre-market. I actually don't typically trade the first 10 minutes of the day. I don't trade from 6:30 to 6:40. However, I believe, somebody correct me if I'm wrong, we've been testing. Have we been? I can't remember now. Seriously, I really do actually need help. Have we been back testing the whole day, or have we been waiting for 6:40? We're just going to back test the whole day today. I don't know. We can always correct it later. I can go back and look at my old previous webinars. Okay, so this is the only inversion trade. Well, there's an inversion to the up and then there's an inversion to the down. But this is the only different way, if you will, that we're going to be trading other than the open price, right? So typically 1:54 a.m., typically a white dot means that there has been historical buying in the market. However, that's not always the case. Sometimes the banks, if you will, or the institutions that are typically buying at that time, sometimes they just don't show up. Maybe they're skipping a meeting. Maybe I don't want to use somebody, maybe Ron, Randy, Jim Crow, something, Al didn't show up and was sick, and the corporate minutes didn't get called in, or who knows. So if that's the case, there's a way that we can trade a white dot short. Normally we're trying to call longs here, but if the price comes down, as you can see here, we actually would not have entered long anywhere because our whole moving average is blue. So we're not going to enter this long because our whole moving average is blue. It does close above the open price line. So once I start seeing something like this, signal show up. Let's show you what it looks like. It's a little easier to explain like this. Here, hold on a second. I need to have an Altoid. So I want to make sure we get this. on the spreadsheet. One check. All right. So we go into this signal with a white whole moving average, but then our very next bar pushes the whole to blue, to downtrending, technically speaking. And then we continue down. And at this point, I'm like, oh, maybe we'll get a, well, maybe we'll see what happens when we get down. No. Oh, another close below. Another close below. Oh, okay. Here's our new candle of significance for the white dot inversion. This is called a puncture trade or an STP trade. So the banks didn't show up for this. Something happened. It's not acting normal. Well, there's a way we can trade that, and we just wait for a candle to close below our stop price line instead of our open price line. But we need our whole moving average to be in sync with this short. So we need a blue whole moving average, and we need to close below the stop price line. This is a trade that Michael and Ron have been teaching for years and years and years and years, stop puncture trade. And we're gonna enter it the same exact way and manage the trade the same exact way that we did if we're using the open price line puncture, I guess you could say. Enter at the close, sell market, place the stop exactly how we were before at the top of the candle close or the wick, whatever happens to be there. And there you go, target 1, move stops to break even, target 2, hold the runner, 236. Does that make sense? And then the same exact for, but in the same exact but upside down for a long. So like right here. And then we're going to get into just doing some back testing. So blue dot typically means we're going down. And oh yeah, see, this is cool. So as we can see, our whole moving average is white, white, white. So we can't take this short because we don't have blue, blue, blue. We have blue, blue, white. We need blue, blue, blue. Whole moving average does not turn blue. We can't enter on either of these candles either. And then we actually come back up and we puncture above the open price line. And then this candle is our candle of significance. It punctures the stop price line with a white whole moving average. So we would enter long here on our STP trade, draw our stop right to where it's in this case the candle open. Yeah, this is what I was talking about earlier. Like, it's crazy how often it just comes, the price comes right up to that T2 or to the T1 and then wicks. This is cool to really kind of dive into the ES today. I haven't actually looked at the ES for a while. So here we go. So target 1 right off the bat, and then target 2. We do not get, one thing to watch out for when you're back testing this strategy, and watch out in case I do it by accident when we're testing today. If the price comes up and then comes back down before we hit T2, that's a stop at break even. So we can't count those. But in this case, we can see that price does come back down, doesn't take our stops out at break even. We have 2 stops here now at break even since we've hit target 1, and we come up and we hit target 2, and that runner is running and gets closed here at 10 p.m. All right, we're ready to do some back testing. This actually won't even take long. I'm gonna blow, I can do this pretty fast. And then we'll throw the stuff on a spreadsheet and then we'll be done with our webinar. Oh, you gotta call Dave though if you don't have the software. Nobody has answered me. Nobody. Maybe everybody here actually has the software already. But I gotta keep reminding myself, somebody's gonna watch this YouTube video at some point who doesn't have the software, so stay on track, Jake. Stay on track. If you don't have the software and you're watching this recording, go to backtothefuturetrading.com. You know what I'm gonna do? I'm gonna do this right now, and then I'm gonna continue the back testing. I'll give myself a break from the chart for just a second and get this out of the way. Okay, if you want the software, you don't have it, I want to let everybody know, first of all, who does not have it. I'm going to go through these slides. Don't worry, I'm still going to do, what's this thing? Oh, You can pause it here if you're watching the recording. This is, what is this? Oh yeah, this is an email that Michael had sent out. Yeah, let's go over this for a second. I just had a great call with another trader that was very similar to yourself, and I wanted to share a few key things with you that I took away from my call with him yesterday. First, he said, this is Michael's repeating what the client said. First, he said, I've been trading for over 15 years, and when you trade this long, you start to notice things. I knew the market turned at certain times on certain days, but I always felt one step behind and I didn't know what was happening. Your software identifies what I always knew and helps me understand the when and the precision I suspected was there. And I completely concur with this guy who's been trading for 15 years. Second thing he said was, I love the idea of not having to be at my computer all the time the market is open. I don't want to go sit there all day. I notice that the longer I sit on my computer, the more money I give back, the more I tend to overtrade. I can see how this would help me tremendously in those arenas. It's helped me tremendously in those arenas. The third thing he said was, I'm already profitable, but I was looking for something to help take me to the next level and give me confidence, maybe guidance during the day when I saw a setup and wasn't sure about taking it. I can see that Flux Tools, that's another name for TachEon TimeWarp, basically fill that missing piece in my trading arsenal. Yeah, maybe this quote was from a while ago. Okay, so there's 90% of us as retail traders. And there's Goldman Sachs. We're up against Goliath here. Give me those bank times. I want the most professional software that I can possibly get. What we're doing here is it's dangerous. I want to have the best weapons for the job. I mean, shoot, the heck with tools. Give me weapons. You win battles by knowing the enemy's timing and using a timing which the enemy does not expect. It's actually called, I think people translate it wrong, I heard. It's actually the Book of the Five Scrolls, not rings. Scrolls makes more sense when you think about it. Good book. This is, so this was Michael's slide that he put in. I don't even know how long he's been using that, but this is my version of Michael's slide. Here's 90% of us retail traders at the end of a day, a lot of times when they've, I don't know, people have blown up their accounts, gotten taken out, stop runs, and Goldman Sachs just relaxing and walking away. No worries. We'll see you guys next time. No, you won't, because you blew up your accounts. You didn't know my times. So yeah, the software really gives us an opportunity to draft, if you will, behind the big cars, behind the semis, and I can say it's saved my butt many times. A successful trader's I love this quote. This is like me. I'm definitely a contrarian in a lot of areas of my life. A successful trader studies human nature and does the opposite of what the general public does. I often do the opposite of what the general public does. Yeah, this is honestly, when I bought the software, I felt this. I still feel this, even in my current role. So us is the Back to the Future team, Dave and myself, Rachel, Michael, Ron, and then we want to put you in the driver's seat and we want to help you as much as we possibly can, really do. So we're going to give you the software, give you the setup, give you the workspaces and the templates, all the best settings for whatever you want, the training, give you the discount. Call Dave. There's ways that he can help work with you on things, if you know what I mean. And then we'll give you a trading future based on truth. I mean, it's 12,000 lines of code. It's not woo-woo. So you'd have a serious choice to make if you don't have software. For all you that was on YouTube, if you don't have it yet. Free lagging indicators, MACD crossovers. Who knows when that's going to happen? Oh, you got to correlate that with the golden cross. Ooh, what about a MACD cross down in a golden shower? Golden cross. RSI's over 80. Just too much. Do you want to use a 95% of other retail traders use, or you want a one-of-a-kind professional institutional grade trading software? So included in the cost of the software are 2 lifetime licenses you can use on 2 separate computers with 2 totally separate machine IDs. free lifetime updates on the software, free white glove installation and setup. If you don't know how to set it up, we will help you set it up and literally take your mouse for you, set up a meeting and literally using the word literally to mean literally, set it up for you. Free video archive training. Limited promo code is WARPOFF, WARPOFF. Toss that in to the little field and see what happens. Let's try it actually, just to make sure it still works. I haven't. Let me bring it in, and then we're going to get back to the back testing. Oh, Randy, what's up, buddy? Where's my Back to the Future? Oh, here it is. So let's go back. Here's Michael. Product store. Back to thefuturetrading.com. Then just click on product store. TachEon TimeWarp. Learn more. Take a deep breath, folks who don't have it, because it does cost money. Something this good ain't gonna be free, but I will tell you it is worth every single penny. I never had, still continue to not have buyer's remorse. In fact, it was like buying myself a birthday present. That's what it felt like, or a Christmas present. So you can scroll all the way down to the page, all the way down, and read all that fun stuff if you want. And then you come down to the price, $2,500, $24.95. Honestly, should I do a rant here? I might do a little rant. If $2,500 is too much for you, and there's going to be a discount code that I'm going to apply here in a second, and call Dave, because who knows? This is just the list price, if you know what I mean. If $2,500 is too much, then I don't know to buy like when I bought this, I was like, this is going to be the backbone to my trading. If I can't afford $2,500 as the backbone, the foundation, the premise, because it does, like the software comes with everything that you, not the software, but purchasing the software comes with everything that you need to be successful. I mean, I'll even send you the spreadsheet. You know, when I remember when Michael, when I had my first meeting with Michael way back, it was incredible. I couldn't believe. He's like, oh, I'll send you the spreadsheet and ... blah blah blah. I was like, I can't. I wasn't even at. I felt like I was really taken care of and held by a company that had my back for real. And I'm not the sales guy. I'm not making any commissions off of anything. I'm just saying that for truth. Yeah, 2 years later, my trading is completely transformed, and for $2,500, I mean, if you can't spend $2,500, then maybe you shouldn't be trading, because you know how fast you can lose $2,500. You can lose $2,500 if your 3-year-old comes in and and you haven't canceled all your orders, or you don't have your keyboard locked, and your 3-year-old, I don't know, spills apple juice on the keyboard and then goes to try to touch it and pushes the sell button. And then you don't notice it until $2,500 later. So, like I said, it's more than the software. You get the crew, you get the team, you get people, real people you can actually call and talk to. You can actually call me, talk to me on the phone, book a one-on-one mentor session if you want. So let's go to buy now. So you can go to the checkout pro training room. So that's Ron's pro training room. So for 25% off, you can join that trading room. It's a monthly thing. It happens 3 times a week, Tuesday, Wednesday, and Thursday, from like pre-market kind of hours till about lunchtime. And I highly recommend it at first, but you know, it's not necessary. There's also plenty of training videos that we have, and you know, you can book a session with me, whatever avenue that you think suits your mind and your person best. So let's go to checkout room without the pro training room at first here. Scroll down the blah blah da yada yada da 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 da, and let's test warp off and make sure that works. Let's see what that does. There you go, $500 off. $500 off. $19.95 for the the foundation of, I mean, if you're ready for it, if you're ready to not have to deal with stochastics, MACDs, RSIs, they're not necessary with this software. Absolutely not. So call Dave, 727-742-2626, David at backtothefuturetrading.com, and it would be worth calling him or at least emailing him and seeing what kind of deal you can work out. If you're watching this on YouTube, Dave likes to be called at 1 o'clock in the morning, East Coast time. Just kidding. Why does he always do that? Jake is so rude. I don't know. Just call him anytime. Oh, he should have his ringer off if he's sleeping. I'm sure I will venture to say that he would appreciate a call no matter what time, and then he'll get back to you when he wakes up. Dave, keep your ringer off. It's going to be ringing off the hook, dude. Keep your ringer off when you go to sleep, man. All right. I'm going a little over. I'm definitely going over today. But, you know, you guys don't have to stay. It's all going to be recorded and uploaded to YouTube. I'm not going to rush the back testing. Yeah, actually, I don't have anything else to do today until like 6 o'clock when I go to my martial arts class. Hapkido. Does anybody out there practice martial arts? I do Hapkido. Bye now. Bye now. Bye now. Bye now. Okay, let's test this day, folks. I mean, there's literally no time limit. I could sit here on this webinar for like the next 5 hours and Michael won't care. I don't know why any of you folks should care. You can listen to this webinar back at like, YouTube will let you play it back at double speed, more than that, I think. Or just fast forward all the way to the end and just see what the results are, whatever. Okay, where are we? Let's find the open. Let's test this day. What day is this? This is today, right? Yeah. Now let's do it like this. I like to do it like this. So I have that nice margin there. All right, so all we're looking for is the whole moving average turn white. There it is. Enter. Let's make it a little bit bigger. I can't quite see. I don't know what took me so long today, why I'm so behind. I guess I've been yapping a lot. So in this case, this is a good example, actually, everybody. We did not hit target 1. We got close, and we ended up break even, all 3 positions. We have to close at the next signal. And now we're looking for shorts. Need the whole moving average to be blue. Oh, there it is, right here on this candle. Target 1, target 2, stop, break even. So here's an example of what I was talking about earlier when we get stopped out at break even, yes. Target 2, right to the wick. I'm telling you folks, there is something trippy about this risk reward tool and the candle of significance and the standard deviation that is created once from the close of the candle of significance to the wick. I call this a standard deviation for this trade, and that standard deviation is 12 ticks. Something about that standard deviation. So 2 standard deviations down. Okay, so the runner was stopped at break even here. Not here. We have to stick with the exact rules that we went over before. So that runner is break even. Okay, so now we are looking for hold, turn white, enter, and the stop goes to the wick, right about there, I believe. Look good, yep. Looking for top, stopped out for the first time, right? Just making sure, yep. It's fine, you'll have that. Oh wait, no. Let's see if that's 5 ticks. We agreed on 5 ticks, right? Let me make this better. Adjusted, okay. Let's see if that's 5 ticks. So that looks perfect there, right? I want to try to be as precise with this as I can because these are being recorded on YouTube forever. 2 ticks, nice. Let's just absolutely make sure from this wick to that wick, 2 ticks. We are not stopped out, and that, my friends, is exactly why I don't place the stinking stop loss on the wick. So let's get this a little bit right up there, right up there. The ES is kind of cool because the ticks are so large compared to NASDAQ, almost 3 times as large, the value per tick, I should say. And then the 2 remaining positions are closed here at the sell dot. Is this making sense to everybody? Target 2 was not hit. Yeah, any questions? Yes, David was asking, yes, you can book time with me on the website. Yeah, just send me an email and I'll send you the info. Jacob@backtofuturetrading.com. JACOB@backtofuturetrading.com. All right, so no shorts here. Oh, so this is a puncture trade to the upside. Like I was talking about earlier, the STP trades. And we'll see what happens with this one. Ding, 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 ding. Oh, stopped out. Oh, wait, no, it wasn't. We've got to keep remembering. I keep remembering that is not 5 ticks, right? 1 tick. See, telling you. Do not place your stop loss right on the wick. That saved a bunch of ticks actually, so that's cool. I'd rather exit here than be stopped out here. So we do have a loss on that one. It's fine. You can expect to lose on this strategy about 45% of the time. Just expect it. I would argue that it might be better just to assume, instead of assuming that you're going to win 65% of the time or so, it might be better just to start out with assuming you're going to lose 45% of the time. And then when something happens like a win, it's, oh wow, that's great. Okay, no trade here. No. Oh, here we go. This candle closes below the open price line. Our whole moving average is blue. Blue. Do not hit target 2, but we do hit target 1 here. And we don't come back to break even, stop. And we're allowed to run. Target 2 actually is hit here. And we exit at the close of the 1154 candle. We're almost done this day, and then we'll cruise through the next day, and we'll be done here in a little bit. So let's see, 1154, and all we need now, so we have a close above the open price line. Our whole moving average is blue. If this next candle remains closed above the open price line, and our whole moving average turns white, then we enter long. There it is. Oh, no, not yet. There it is. Oh, you little stinker. Every once in a while, it does happen. It's not that often, but you will find that you get these down, the signal ends up, the candle of significance ends up being a down bar or a selling bar or a bearish bar. And when that happens, for these webinars, I haven't been, I think I've just been doing this regularly, like, okay, well, there's the close of that candle, there's the wick, I guess that's what we have to do. So there it is, which kind of stinks on this one. I will let you, I'm not gonna count this as in our spreadsheet because I haven't been doing this before, otherwise I'd have to go, I guess we could do it on the ES. It's up to you folks, let me know. Let me show you what I'm about to do. So here we can see we did hit target 1, we hit target 2, of course, and then we get stopped at break even here for the runner, right? Let's pull this over just so you can, I mean, it would actually be, yeah, it would be coming all the way to here. So we're stopped to break even. Now, what I've been playing around with lately on the NASDAQ, this is something new. And it seems like it works really well so far. If you get a down bar, little spinning top thingamajig like this, and the system tells you to enter here, you can enter here at the close of this bar, but because this distance is so lame and it's a down bar, like what is this? I mean, we need some room to let our trade breathe. What is that? 3 ticks? Like, oh, come on. Look at the size of these bars lately moving into this. So you can look 1 bar back and use that bar 1 bar behind. I'm actually really excited about this. I have been using it. Use that bar, the previous bar, as the area to place the stop loss. and then your targets will be projected based off of the close of this candle, which is where the whole moving average turned white. So you got to look at it like this. Blue, bam, turns white. Oh man, that means I got to enter there with only like 3 ticks stop. Well, just go 1 candle behind as long as it's not crazy, and just try it. Seems to work really well. Oh, you know what's crazy? It ends up getting stopped out at break even anyway because of these wicks. Anyway, I'm glad I shared that with everybody because it has been quite nice on the NASDAQ so far as I've seen. So we're just going to leave that as it is. Anybody have any questions on that? Might there be auto trading software in the future? Yep, it's always next month. Michael and Ron says it's always next month. But yeah, they are working on it. A lot of their time has been spent on an update to the Aurora software. They wanted to make sure they had that right. This is a flagship software though, so we're stopped out on break even. Okay, get over it, Jake. Let's get rid of that. You've been really agitating. Oh, that's a crazy puncture trade. So this trade here, because this candle doesn't close above, right? Nope. That means we got to get in on this. Now it could be some of these trades with this system can be a little scary, but I haven't tested the ES. I really have no clue how this is, if this is going to work. But see, you know, a lot of times this will happen as well. Like it's like it looks really scary, but you know, then you're only a few candles away and you get 12 ticks times 3. That's cool. Sounds good. Okay. Now we're almost done with this day. Where's the end of the day? Okay, so this next candle, white hull, white open price line, white dot, and enter on this candle. Target 1, target 2, break even. Target 1. Yeah, it's a really easy strategy to backtest actually. If you're a little unsure about when if the break even was hit before, and if you're backtesting, the target 2 was attained, then you can always switch down to the 1-minute chart or even a 30-second chart, and you can figure that out. So there's a way to accurately backtest this strategy, which is nice. Not all strategies can be backtested this easily, as easily as this, I should say. When designing this simple strategy, I wanted to make sure that I was in accordance with every single one of Mark Douglas's rules. Anything has there's this 1-7 principle of consistency that a lot of strategies, unless you have multiple targets, I don't see any other way to do it. I pay my number 5. I needed to be in alignment with number 5. I pay myself as the market makes money available to me. Thus the target 1, the target 2, and the runner, and trailing the runner if you want to do that as well. All right, so there's that day. Let's knock out the other day while I'm in this flow. The gnarlier day, hopefully it won't be that gnarly, and then we'll get the spreadsheet out and then we'll be done. Now I'm going to go kick some things at my martial arts class. Let me make sure we're on the right day here. 3 minutes. Here we go, August 24. All right, to it. Sweet. I'm a little scared. Not really. 6:05, 6:30. It's open. F7. Bam. Okay, here we go. Oh boy. So our entry would be here. Our stop is at the wick. Stopped out. Not too crazy though. And like I said, I can't remember if I was trading if I was backtesting the first 10 minutes on the NASDAQ videos that I've done. So, well, just guess we can see. All right, whole moving average turns white, and we got to close above. So this is our entry. Again, I have no clue how this is going to work. Stopped out. It might fail miserably. I'm nervous. It's live and it's getting recorded. Now we're not using patterns. Like I see things that people who don't use patterns won't see. Ah, another stop out. I mean, I wouldn't be surprised if this day doesn't end up positive because of all the reasons I mentioned before. And, you know, that's realistic. It's realistic to expect a losing day every once in a while. There's nothing wrong with that. If anybody finds a strategy that if you trade every single trade of the whole day for like 6 months straight, and or even for a week straight or 2-3 weeks that doesn't have a loss, then let me know. I'll be interested. So we're not going to take trades. So like it closes back above again, we're not going to take that. We're only one chance per window. More range. Stop puncture here. That's a long. So no targets are attained. Not surprised. When we're ranging, right? It's can be a little strange. Trying to take 1 and 2 targets. You know, you could play around with something like if it's ranging, figure out a way to quantify that. Then one could, I don't know, maybe only have 1 target or have 2 targets but no runner. Did that close above? Whoa, calm down. I don't think that closed above. This next one did. That's closed right on. No, this one did. Yes. Why, Michael? Why? All right, so that's not a stop out. That's actually target 1, target 2, because that's not even 1 tick below. So we did hit target 1 and target 2. Okay, cruising right along. Ding, 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 ding. Oh, there we go. Target distance. White, white, white. Stop out. It's going to be cool to develop an equity curve over the next few weeks. Just testing this ES chart. I mean, I already know that it's fantastic on the NASDAQ. So, oh, close below. Oh, it's so sad. Look at these sad moves. It's just a sad, scared, short interest release date. No news. Was there any news? I don't even think there was any news. Nothing. There's one. Maybe this one will do something. I really have no clue. Oh, come on. 3 7-tick winners though. Whatever, call that 6, just less. Okay, here's our entry, 10:03. Oh no, okay, so here's a here's a good example of why I like to move stops to break even as soon as target 1 gets hit, because you know this will happen. So we hit target 1 and we break even on the remaining 2 positions. Ding, 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 ding. Just need to close below. Nope. Just need to, oh. That was a close above, technically, right here. We're just trying to. Target 1. On a trade like this, I mean, you could also just not move your stop to break even until this I do play around with this until this candle is done forming. Oh, I think that did. It came back in and wicked my entry for my runner. You piece of junk. It did. Seriously? Yeah. Yeah, can I help you? I'm still on the webinar. I'm almost done though. Okay, so break even and now 1142, close below. Going a little late today, folks. All right, so let's see. This one, don't even really. Yeah, it's like they knew. Get that right on there. And we're almost done. 12 o'clock, sweet. Yeah, that did not hit target 2. Hit target 1 though. And break even. Again, why I like break even. And break even. Okay, close above, white dot. Target 1. Oh man, it's really like making it painful for me. Right there. So well, we got, you know, what I want to do is not count this as a break, as a target 1, and then count this or this as a target 1, so I don't get stopped out on my second and third position. And anybody who's back tested before for any amount of time, you want to just go ahead and take the worst case scenario. So that's what we're going to do. We're going to enter, we're going to hit target 1, because a lot of times I'll front run my target by 1 tick, so I'll be down here, and then we'll stop out of break even. Oops. Even though I don't want to, but I actually honestly don't know what's going to happen, so who knows? Maybe that'll be the best decision. Oh yeah, look at that. Would have stopped out at break even anyway. For sure, no question. Okay, now we're almost done. We got what, 1 more trade left? Yep, so we don't actually switch whole colors till there. No. Okay, there we go. All right, let's get the spreadsheet out and let's do this thing. Webinar ongoing. Let's get this out. I can't believe how long why is this taking me so long today? Whatever, it's fine. Let me clear the data on, let me save a copy of this first. File, save as, this PC, we're ongoing, NQ, save. Excellent, okay, let's drag this in. Here's the NQ, we're just gonna delete all of this data. And now that's just commissions getting taken out. $1,500 almost, $1,400 of commission after 353 trades. So we need to make the tick value 1250. Gotta keep with keep it exciting and use minis. Just gonna increase that big time. Let's get rid of the dates. Let's go back up. What is that big? Did I forget something? What is this thing? What the heck is that? I don't know what that is. I don't know, it doesn't matter. I can fix that later. I just want to get the data in there right now. Cause I'm hungry for some lunch and I'm like 2.5 hours. I mean, you people will be able to understand how to use this strategy for sure. Okay, so let's start with the crap day. Crap day. Was that, yeah. Oh, here we go, okay. Maybe it's not as bad as I think. Or maybe it is. Still go $5 for a commission, $12.50 per tick. We'll change this to ES or MES, whatever you want. Same thing, times 10. Okay, -9, -9, -9. Gnarly. There's your max drawdown. Four, 8, 4, 8. What's going on here? Why do I only have? Oh, sorry, folks. I don't know why I only have 2 tags there. Oh, because that's where my entry was. I still need to break even though. Get the commissions in there. 0. Okay. Yeah, this is not going to take that long. Okay, we're just going to keep going along. 12. Oops, that's minus 12. Catch me on these things. Minus 12, minus 12, minus 13, 5, 5, 9, 6, 7, 7, 0, 0, 10. Starting to cruise back up a little bit. Slow and steady. 5, 2, 0, 6, 0, 0. Well, NASDAQ or ES takes the cake on biggest. Oh, I did have one minus $700 day on the NASDAQ. There we go. Okay, now let's do a day that doesn't suck. But this is why you need, multiple days to really analyze the strategy. You can't just do it on one day. That's preposterous. We all know that. All right. And as soon as we're done with this, oh man, that's cool. I don't have to do the sales thing that Michael wants me to do at the end. All I have to do is just say goodbye and eat some food after I'm done with this spreadsheet. All right. Thanks for hanging out with me, everybody. I appreciate all of you. I mean, this is an experiment for me as well. 29, 59, 86. Oh, that 5 doesn't count. That's just a measurement for where we put our stop. Okay, 5, 20. Hold on a second. This one doesn't have a, I need a T2, right? Yeah. Each one has to have 3. So T1, T2, runner. Okay, so we don't need 5. We need 20, 40, 65, break even, 0, 0, 0. 13, 26, 0. Oh, oh. That's why you gotta just stick with your strategy. Oh, I had a losing day. Let me change something. As soon as you change something, the next day would have been amazing had you just not changed something, and then that day ends up being a loss. I mean, hypothetically, it's quite the endeavor that we choose to do here. 22, 15, 22, 5, 5, 6, 17, 9, 15, 6, 3, 0. You can tell I have a lot of experience with this, right? I can see, I just, thousands and thousands. And this is the strategy I choose to share. Never tested on the ESO. 12, 13, 12, 10, 22. Why do I keep doing that? There's not a third position here. Oh, probably because it's just break even anyway. That's why. I would keep track of the commissions. Well, there you go. There you have it. I would say that's coming out on top. $5,600, or if you're trading one micro, $506 or $560, something like that. The commissions are going to be a little bit different. We still say $500 in 2 days. One micro. I could trade 2, 3 micros per position and end up with like pretty nice chunk of change, even just use micros. Here is the trade side by side. I'm gonna have to dig in and try to figure out where this stupid peak is coming. But if we zoom in, just don't worry about that dumb peak for a second. We had suffered a drawdown. Look, a little double bottom, and then we cruise back up. And we're around 5K or so. Is that correlated correctly? Yeah. All right, and then here's what the trades look like side by side. Those blank spaces are the zeros. Pretty nice. Not so bad so far in the ES. Appreciate everybody. Thank you for being here. I'll see you next week for more fun and games. Thanks for bearing with me through this extended session. Let me put my contact info in the chat. Jacob @ back to the future trading.com. Yep, there it is. If anybody wants private mentorship, reach out to me. I'll send you the info. And don't forget, if you want that fib tool, send me an email, jacob@backtofuturetrading.com. I'll send you the fib tool. And if you want that, then I might as well send you the information on how to get in touch with me as well. Reach out to Dave. He's the guy in charge of selling all this stuff and making deals and wheeling and dealing, Dave. His number, again, is 727-742-2626. He loves to talk to people. Call him on his phone. You don't have to shoot an email. Text him. Email him. I'm sure he loves emails too. Okay, I'm going to end the webinar how I usually do. You're welcome. Thanks, Chris. Thanks, Bruce. Oh, I do have a couple questions. I think you and your viewers will like the free day of the weekend. Oh, really? Okay. Let me just see what that is. 1 sec. I don't know what that is, but let's save that. Okay. All right. I don't think I have any questions. Everybody's good. All right. So remember, folks, there are no mistakes in trading. There's only happy accidents.